Okay, ladies and gentlemen, good evening, all. Based on the environment that we find ourselves in, I'm going to make the meeting pretty sharp and snappy, just encouraging people to maintain their protocol. As you're aware, the incident of coronavirus 19 has been spreading more recently to more areas than before. So I think we have to be doubly careful. No handshakes, etc., etc. I think we all know the drill. So the annual general meeting of Jetcon Corporation is called to order. The agenda is on page 5 of the annual report. So we're going to lay the audited accounts before the meeting to receive and, if thought fit, approve the audited financial statements of the company for the year ended December 2019, together with the reports of the directors and the auditors thereon. But before, I'm going to call the auditors to read the audit report, but before that, let me introduce the head table. To my immediate left is Christine Clark, the Hority, Carl Carby, Joel Jackson, Andrew Jackson, and Garth McKenzie, and Sean Jackson is right across there, and I'm John Jackson, your chair. So Ms. Crooks, you want to just read the report for us, please?
Good afternoon, everyone. I'm reading the independent audit. You're not hearing? Oh, I'll get on to it. I'm reading the independent auditor's report from the auditing firm Crooks Jackson Burnett. To the members of Jetcon Corporation Limited, if I might be shouting because I'm wearing a mask and I want to make sure everyone hears me. To the members of Jetcon Corporation Limited, report on the audit of the financial statements. Opinion. We have audited the financial statements of Jetcon Corporation Limited, the company, set out on pages 24 to 43, which comprise statement of financial position as at December 31st, 2019, statement of profit or loss and other comprehensive income, statement of changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the company as at the 31st December 2019 and of its financial performance and cash flow for the year then ended in accordance with International Financial Reporting Standards, IFRS, and the requirements of the Jamaican Companies Act. Basis of opinion. We conducted our audit in accordance with International Standards on Auditing, ISA. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of financial statements section of our report. We are independent of the company in accordance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, IESBA Code. We have fulfilled our ethical responsibilities in accordance with the IESBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Our audit approach. Audit scope. As part of designing our audit, we determine the materiality and assess the risk of material misstatements in the financial statements. In particular, we consider where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all audits, we also address the risk of management overrides of internal control, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. Key audit matter. Key audit matters are those matters that, in our professional judgment, were of most significant in our audit of the financial statements of the current period. Those matters are addressed in the context of our audit of the financial statements as a whole, and in forming our opinion thereon, we do not provide a separate opinion on these matters. Completeness, existence, and accuracy and impairment loss relating to inventory. Key audit matter. At reporting date, the value of the company's inventory amounted to $444,682,692, representing 65 1/3% of the company's total assets. Due to the high level of stock items that the company carries, there is a risk that could arise due to breakdown in the physical control over inventory, inaccurate method of valuation, overstocking, resulting in items of inventory being sold subsequently at lower of cost. How our audit address the key audit matter? Our audit procedure in respect to this matter included observing the annual inventory count for adherence to appropriate stock take process and testing of items by agreeing count quantities to final inventory report. Testing controls over management review of costing. In respect of motor vehicles, testing the supporting suppliers' invoices and all direct associated costs. Test sales subsequent to reporting date and evaluated such sales to determine whether item of inventory, if any, were sold at a price below cost in the context of net realizable value. Conducted an evaluation of the overall sales performance of the company for the period January 2020 to date of finalization of these financial statements. Based on our independent evaluation, we determined that the valuation method used in the valuation of inventory is adequate, and the inventory on hand at year-end is not impaired. Our opinion on the financial statement does not cover the other information, and we do not and will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read the other information identified above, and in doing so, consider whether the other information is materially inconsistent with the financial statement or our knowledge obtained of in the audit, or otherwise appear to be materially misstated. If, based on the work we have performed, we conclude that there is a material misstatement of this other information, we are required to report that fact. We have nothing to report in this regard. Responsibilities of management for the financial statements. Management is responsible for the preparation of the financial statements in accordance with international financial reporting standards and with the requirement of the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatements, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing as appropriate matters relating to going concern, and using the going concern basis of accounting unless management either intend to liquidate the company or to cease operations, or has no realistic alternative but to do so. Auditor's responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that the audit conducted in accordance with ISAs will always detect material misstatements when it exists. Misstatements may arise from fraud or error and are considered material if, individually or in aggregate, they would reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit in accordance with IAS, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of the financial statements, whether due to fraud or error. Design and perform audit procedures responsible for those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misstatements, or override of internal control. Obtain an understanding of the internal control relevant to the audit in order to obtain audit procedures that are appropriate in the circumstances, but not for the purpose of expressing opinion on the effectiveness of the company's internal control. Evaluate the appropriateness of accounting policies, use and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of going concern basis of accounting, and based on the audit evidence obtained, whether a material misstatement exists relating to evidence of conditions that may cast significant doubt on the company's ability to continue as a going concern. If we conclude that the material uncertainty exists, we are required to draw attention in our audit report to the related disclosure in the company's financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of the audit report. However, future events or conditions may cause the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and contents of the company's financial statements, including the disclosure, and whether the company financial statements represent the underlying transaction and events in a matter that achieve fair presentation. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purposes of the audit. In our opinion, proper accounting records have been kept so far as appeared from our examination of those records, and the accompanying financial statements are in agreement therewith and give the information required by the Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Crooks, Chartered Accountant. This was signed on February 28, 2020.
Crooks, thank you very much. All right, let me just, before I open the financial report for any questions, any observations, and for approval, a few words. As you would have seen from the annual report, and you'll have most likely read in quarterly reports that we issued last year, and certainly this year, last year was a challenging year for Jetcon, I think the entire motor vehicle industry, and it has continued into this year. Initially, things looked quite promising, and then we're all aware of the impact that the COVID-19 has had on operations worldwide. As a result, sales declined, as you have seen if you read the quarterly report to June. Sales in the second quarter were a fraction of what it was last year and a fraction of what it was in the first quarter. There are some indications that there is some rebound since, and we are hopeful as time rolls on that things will pick back up and get back to the level that we are accustomed to, and deliver the profits that we want to be delivered. Jetcon is not alone. If you look at Trans-Jamaica highway results, you'll see the impact of the reduction in the use of motor vehicles on the tariff that they collect there. And so it is going to take a little time for the economy to bounce back in a serious way and restore sales, not only to where it was in the past, but to push us further ahead. So I think you're going to see a little bit of difficulty for the rest of this year, and the stock price may or may not bounce back, but I think people ought to look to the future. I find in the investment world, one of the best way of making lots of money is to find stocks that have been beaten down, but the company have the fundamentals that they can actually bounce back strongly from. All right, with that, I am going to open the meeting up to question and answer. Yes, Mr. Staple, 2 questions. Start off. Yeah, there are the meeting is being beamed online, streamed online, and I believe the persons online can send in questions. Okay. Yes, Mr. Staple.
Mr. Chair, with your permission, sir, I have a few observations I would like to share before I ask my question. So with your permission.
Well, if you're not too long, Mr. Staple.
Okay.
All right.
Mr. Chair, as we gather here today for this AGM, we must give God thanks for his guidance and protection over the last year. Despite the many challenges we have overcome with God's blessings, we invite our Heavenly Father to this meeting today and ask him to guide our thoughts and actions, and that at the end we will be more aware of what is happening in our company.
Amen.
This we ask in Jesus' name. Amen. Despite the reduction in earnings, Mr. Chair, I take the opportunity of congratulating you, Mr. Chair, members of the board, and the hard-working employees for your hard work in keeping our company afloat. Board and directors meetings were well attended, and with this sharing of expertise enabled our company to withstand the many challenges being faced in this country today. Please enclose some further information on board evaluation for 2020. This is very important, not only compensation.
Okay, thank you, sir.
Okay, my question, Mr. Chair. With your permission to the auditor, Mr. Chair, through you to the auditor. Mr. Auditor, why would the high level of stock items lead to a breakdown in physical control over inventories, an inaccurate method of evaluation? Your comment.
You're going to take a round of questions?
No, sir. Yes, Effie, on the respond. Yeah, I'm not sure.
It's a normal auditing test that is carried out.
I'm not sure I understand the question of Mr. Staple.
She mentioned as her key audit item
Yes.
that the high level of stock items could lead to
Could lead to.
a breakdown in...
Could lead to. Could lead to.
Yes.
Didn't say did lead to.
No, I didn't say it led to, but it could.
Yes.
Over inventories and inaccurate method of valuation.
Yeah.
Why? How come?
It is a normal principle. That's our process of testing.
Mr. Staple, the situation is that the inventory, it is what, 60-odd% of the assets of the company?
It's a methodology used in auditing. You probably might not be aware, but that's a methodology used in testing.
I don't think that's what he's getting at, though. What I understand that he's suggesting, if I might paraphrase it, is that why would the size of the inventory lead to a breakdown in accounting policy? Is that what you're
Yes.
suggesting?
Yes.
That's identified as a risk area. When we, at the stage, at the planning stage, we identify the risk area for an audit. And we looked at inventory as a possible, we didn't say risk, as a possible area of risk. And so we carried out extensive tests to ensure that the valuation, what is presented in the balance sheet is correct.
Miss Auditor, I'm saying from your professional point of view, why would this happen? Or why could this happen? You're not a professional. I'm talking to you as a professional. And I would like to know why, in your professional viewpoint, the high number of stock items could lead to a breakdown in physical control of inventory and also an inaccurate method of valuation. From your professional point of view, why? Why would this happen? Or why could this happen?
Well, Mr. Staple, may I intervene, sir? Because I think you're asking an academic question, and I would like to just let you focus on the accounts now. Because once you have inventory or receivables of large amounts, various things could go wrong with it. And therefore, but I don't think you should be putting the auditors through an interview test at this stage. So I think you should move on.
Mr. Chair.
Yes, sir.
My interpretation of this requirement of the IFRS for this key audit item is for the professional to be able to explain to the shareholders why, in the opinion of the auditor, this could happen.
Well, Mr. Staple,
and that's all I'm asking. Why, in your opinion, what could that cause it? What could cause this? I'm
suggesting to you, as an accountant, that wherever there's large amounts of value of a company, fraud could take place. People could steal it. People could misrepresent it. If you have collusion, people could do all sorts of things. So it is an area, in other words, it represents just a large portion of the assets of the company. Special attention has to be paid to it to ensure that because it's extremely material. So greater attention needs to be paid to it and ensure that it is stopped.
It's a control, it is a concern to me as a non-professional.
Yes.
It's a concern, and one who has been exposed to this type of business. It's a concern to me, and I would like.
Well, what's the concern? What's the concern, Mr. Staple?
Okay, we could discuss this after the meeting.
What's the concern?
It's a serious concern to me, but we will discuss this after the meeting. Mr. Chair.
Yes.
Turn with me to page 24. Mr. Chair, in 2018, you had total revenue of 1.162 billion. Total revenue, everything in revenue, total. And total expense was 1.1 billion, giving you a net revenue of $91.88 million.
Not following your mathematics, sir. I don't have 99. What's the net profit you have?
What's that?
What's the net profit? Which year you're referring to?
18, year 18.
Okay, follow. Yeah.
For every dollar that was earned in revenue in 2018, it cost 92 cents, and 8 cents profit was made. In 2019, your total revenue was $1.027 billion. And that $1.207 billion cost you $966.763 million, which gave you a net profit of $60.3 million. For every dollar of revenue earned in 2019, it cost you 94 cents, and you made a reduced profit of 6 cents for every dollar. Incrementally, Mr. Chair, total, your revenue was $135 million, which cost you $103.7 million, which gave you a net return, a net profit of $31.6 million. For every dollar of incremental earning, it cost you 77 cents, and you made a profit of 23 cents. Mr. Chair, let me get back my paper here. Oh gosh. Sorry, Mr. Chair, sorry. Okay, what are you going to do to reverse this reduction of net profit that was done in 2019? How are you going to change that around for 2020?
Mr. Staple, the scenario as it stands now is that the odds are, as things are, at the midpoint, and certainly what the numbers look like subsequent to a half year, that the profits for this year, in all probability, will in fact be less. Revenues will be less, and profits should be less, I think. I don't believe that you'll see any significant reversal of that situation until next year, when hopefully the coronavirus internationally recede substantially, that business life can return to normal or near normality, so that people who want to buy motor vehicles can buy motor vehicles, because that's the area that primarily drives the top line and ultimately the bottom line. And if we can't sell the vehicles, we can't increase the top line significantly. And there are strategies that we are adopting to try and improve sales. But if subsequent to the half year sales are up to about 60% of what they were last year, and August and July are some of the best months in terms of sales for the year, then you know it's going to be very challenging to move things up, back up to last year's levels between now and the end of the year. It's not impossible, but I suggest it's going to be very challenging. So we have to look beyond. Many companies in Jamaica, if you look at the various companies as listed companies, a plethora of them have reported lower sales and profits for the June quarter. And some of that is going to carry over into the September quarter, maybe not as bad as the June quarter. Those are some realities that we have to face. The other factor to remember when you start to quote profit as a percentage of sales is that if your sales decline, because we have a relatively low gross profit margin, it means that your net profit is likely to decline faster than the fall in sales, because there are inevitably fixed overhead costs. For example, we reduced cost in Q2 this year. Although we reduced cost quite a bit, there are still costs that have to be carried. So we couldn't, certainly administrative costs were not reduced at the pace at which sales declined. So there are some constraints that once we are going to continue in business, I mean, we can get rid of all the costs by closing down the business. That doesn't make any sense, right? We are operating the company as a going concern. We made profit in the first quarter. We made a small loss in the second quarter. If the numbers for the third quarter continues, we should end up with some profit, and hopefully that will continue to the end of the year. And we just have to ride out the storm and we do whatever can be done in terms of marketing and sales to get things moving up. My own suspicion, we don't have any significant debt to contend with, and we have inventories. If we reduce inventories, we can pay off the debt easily. I don't know that all used car dealers are in a fortunate position as we are in, and my suspicion that some of them may actually fall by the wayside. That's my guess. I don't know.
Good professional answer, Mr. Chair. Good professional answer. Mr. Chair, I have some other questions, but I'm going to ask one more and then sit and ask other shareholders to participate, and I will come back. But I'll ask this one question. In 2018, you had 30 employees who were with the company with a total revenue of this $1.62 billion. Each employee generated an average of $38.7 million, average. In 2019, there were 35 employees with total revenue of $1.027 billion. Each employee generated an average of 29.3 million. How do you plan to correct this for 2020? Your comments.
I pretty much gave you the answer before. Same thing applies there. I think in some cases the numbers might have been trimmed back. I don't know to what extent we plan. One of the things we had planned last year is that we'd hope to do some expansion. And we still have plans for expansion outside of Kingston, but that is not going to be something that's going to happen anytime soon. So whenever you plan expansion, you're going to have to, there are costs that have to be incurred up front. For example, I think last year, year before last, we had incurred additional rental costs in hope that we will have been able to take advantage, significant advantage of the free zone operation, which never materialized. And some of these things are going to happen from time to time. But you can't be always crippled by fear that you're going to, this thing may not work out. Those are some realities that may happen. Sometimes we have to look at it practically, what is the most logical result that can be expected, and charge of it, and at the same time monitor what's taking place. And if we need to modify what we're doing, whether stop it or take a slightly different approach, then that's what management is about.
Thank you, Mr. Chair. So I'll sit and ask other shareholders to participate, and I will come back.
Sure.
So, Chairman,
Yes.
Livingston Young. We already know everything in the book, Mr. Chairman, but I want to have an understanding of what going on in the company. You can turn to page 41, please. Note 20, page 20. Yeah, page 41, note 20D. Financial risk management. Contain. There? Financial risk management. 20, note D. Credit risk. You hear me?
Yeah, 41.
Yeah. All right. December 31st. As I saw, December 31st. 31 to 60 days. 31 to 60 days past due. 61 to 90 days past due. 91 to 120 days past due. 121 to 180 past due. Over 180 days past due total. All right. Your current current amount, you're trading and receivable to 11,661,499. A 5% X rate losses rate at 5%. You could have explained to it and losses allowance, please. As of December 31st, 2019.
Ms. Crooks, you want to help me?
Okay, management has determined, they have a risk profile. Remember we spoke about risk earlier?
Yeah, management risk, yeah.
Yeah, management has a risk profile for its customers,
yeah.
Right?
Yeah.
And based on the new IFRS 9, or even as soon as there is a debt,
yeah.
there is a risk.
Yeah,
so even the current debt, there's a risk factor to that current debt. So there's a 5%. Management has determined that they'll have a 5% risk profile on the current debt. It might not happen.
Yeah.
It just to be conservative.
Yeah.
But that's the IFRS. It's a requirement that a determination be made on the various levels. Yeah. So if you go along, you'll see a 5%, a 8%, 11%, and so on, based on the age of the debt.
17%, 23%.
And so on. So that is the risk. What has happened, sometimes you might look at a debt that may be, if I'm moving, I hope I'm not moving too fast, that is 180 days, and 40% provision has been made. However, there might be an arrangement with management for a debt to be paid over a period. So that's the reason why probably all of the debt is not considered bad. But if you the maths actually, it's computed alongside here. If you were to look at the dollar figure, you'll actually see the computation, the overall debt, the percentage that is impaired, and the calculation that shows. So the provision for the debt is 3 million.
Yeah, I'm sit here.
Right.
It's on the same page. Let's get 42.
Yes.
Right there at 42?
41, yes. And then we do a reconciliation at the end, I think.
Yeah,
right.
42. All right, turn to 42 on the same side.
Yes.
Long-term liabilities.
Yes.
Payable.
Yes.
Accruals.
Payables and accruals.
Yeah, accruals.
Yes.
Customer and deposit. Bank overdraft.
Yes.
Of 1,400,000 and something. 2019.
No, there's no overdraft in the current period.
Because I dashed here. Oh, yes.
Yes.
I dashed, yeah, I see it.
Right. So we are comparing 2019 with 2018.
Your customer deposit was 6 million.
The customer deposit
6
on
million.
the payables.
Yeah, 6 million.
That is where customers might make a deposit on a car.
Oh.
Or other miscellaneous things.
Yeah, because we see 2019 and 2018 the dash.
No. For these are no. Our account, the accounts is divided into what you call current and non-current.
Okay.
So the non-current would probably constitute long-term debt.
Yeah, I see.
So if you were to look at the long-term liabilities, on the non-current you have 29, and on the current you have 9. So the total debt is actually 38,000. The total debt. But we divided. When we say current relates to the period, to the amount which is due within 12 months.
Yeah, because
in the next 12 months, the company is required to pay 9 million of that total debt.
Yeah.
So that's why it is separated.
Yeah, let's see. 29. All right. Thanks a lot.
Okay.
You wanted to, so Steve, you can join the queue again. You have an online question?
Yes. So Natisha Fagan would like to know what the plan is for the piece of property adjoining our current property that was acquired last year. So the plans for the piece of property that Jetcon acquired that is adjoining the current property.
Andrew, have you heard the question? What?
Mr. Chair.
Sorry, what did the Commissioner say? What was the question? What was the question?
What's plans for the property adjoining us? Good evening, ladies and gentlemen, and thanks very much for the online question. Yes, two primary reasons for purchasing that property. First of all, it is adjacent to us, which makes it very valuable to us. It is one of the main reasons for getting it is for actually storage of motor vehicles, and we're looking at the possibility of having another sales division. In other words, that property is on a main thoroughfare in Kingston, Mullines Road, and we're actually looking at setting up another sales division right there. Okay, thank you.
Yes, Mr. Staple.
Yes, Mr. Chair, thank you very much. Turn with me to page 37.
Anybody else have any other questions? Or okay. You're gonna. Mr. Staple, do me a favor, sir.
Yeah.
Can you allow the others to, and then you can come in if you don't mind?
That's what I said.
Yeah, I know, but nobody else said actually.
Yeah, good evening, Mr. Chair.
Good evening.
I just want you to turn to page 43.
Yeah.
I saw where you have a lease commitment on an operation lease which expired on May the 31st, 2020. The maximum amount payable for the remaining life of the lease is 6 million. What happened to that lease? Is it still going on?
I would think so.
So you have a new lease?
This is, I presume, the lease we have with Kingston Walls.
The lease agreement hasn't been signed, but essentially it's just
Okay, all right, thank you.
Yes, Stephen.
Yeah, hi, good evening to the board, Director. Stephen, I'm a shareholder. I'm just wondering if there was any consideration, if there is any consideration to a segment of the vehicle market that might be potentially more attractive in a market that has a depressed purchasing power. I'm really implying and talking about motorbikes. And how you would view that. You know, purchasing power is depressed, but people need transport. And it seems as if it would actually solve the problem of social distancing.
We're not interpreting it otherwise. But I don't think the board has actually seriously looked at that aspect of it. So I guess Andrew, I'm sure he has various things thinking about from time to time to impact sales and impact the profit. So if he hasn't thought of that, it's something that one never knows, one can look at going forward. Yes, Mr. Staple.
Mr. Chair, turn with to page 37. Explain the main inputs of this other receivable of 21.4 million versus 7.8 million in 2018.
Sorry? Which?
The line item other receivables. Moving from 7.8 million to 21.4 million.
Auditor is going to explain.
Oh, sorry. All right, for the 21 million that is there, 18 of that is receivable from GCT. And as usual, part of our audit tests that we spoke about, how we plan our audit, is to do subsequent events review. And in January, when we checked, over more than half was subsequently received from the government.
Received or recovered?
Received, recovered. The same.
Any other questions?
I am not too sure if I understand clearly what you have
You
said.
asked what was the 24 million receivables, and I said 18 was, over 18 million was GCT recoverable. And as we do our audit work, part of our testing is subsequent collection. And when we did it for the month of January, over 9 million, 9 point something, almost 10 million was recovered of the 18 million.
Okay. Mr. Chair, still on page 37. Explain this value of 140.4 million motor vehicles special economic zone says. Explain that to me. Or explain that to us.
Mr. Staple, we have vehicles at and Shunningham Road. We have vehicle on the special economic zone, where the vehicles come to the special economic zone and we don't have to clear them until we need them, as opposed to the traditional import system where once you import the vehicles, if you don't clear them within a few days, you start to incur charges. So it is beneficial for us. We don't have to pay any duties, we don't have to pay any fine or anything. So that is one location where we'll have motor vehicles parked.
So we are not in the business of transshipment then, basically.
No, we're not in the business of transshipment. At least not yet.
Not yet. Okay, but the plan is there.
Well, there's always, once there's life, there's hope.
Okay, Mr. Chair.
The whole matter of transshipment, though, Mr. Staple, is that you have to go and find
Yes, I know.
people who will actually.
Mr. Chair.
Yes.
Net profit declined, and with issued shares at 583.5 million units, earnings per stock unit declined significantly. How do you and members of the board and staff plan to return this to the 2018 figure of $0.16?
You remember,
Earnings per share.
the answer I gave to your first question? So that is ditto.
I didn't get that.
Ditto to the first question you asked, the same answer I gave. It's the same answer for this.
Okay. So that means you have it on your calendar.
Yeah, we actively, at each board meeting, we actively are engaged in finding solutions how we can drive the top line and drive the bottom line. The top line is critical because we run a relatively lean operation. So the focus to get the bottom line improving is to get the top line growing and growing rapidly.
Thank you very much, Mr. Chair, and God's blessing be with us as a company.
Thank you very much.
Just one more, Christian.
Could you just repeat your name for me?
Michael Hendricks. Michael Hendricks.
Hendricks.
Yes, sir.
You're not,
Yes, Mr.
you're not
Chair.
related to the singer?
No.
Former singer, okay. Just checking.
Yes, Mr. Chairman, I just want to find out, I saw where the staff costs have been increased and the director fee decreased. Why is this so?
Well, for one, we reduced the directors by one, or the outside directors by one. Right, and there's also the matter of no subcommittee; those don't affect it. We reduced the number of directors reduced by one, I think, last year.
Okay.
Okay. In terms of the staff, you asked a question about the staff.
Staff costs, why is it increased?
Why is it decreased?
Yeah.
Or increased?
It increased
Or, well,
by about 3%.
yeah, I think we had actually added some staff last year. Remember me, serve me right? We added both salespeople. Sales is a combination of of commission, but there are some fixed costs associated with it.
Okay.
I think there are 1 or 2 additional staff members.
So during this period with the corona, I think it's
But at
supposed to
this
decrease.
point in the time, people were laid off, etc. If you look at the quarterly report, you'll see where costs fell quite a bit
Okay.
because staff members were furloughed temporarily. Some of them are being brought back. So that's the way we have to. We have to. If there's going to be increased activity, for example, because we have more locations.
Okay.
Because once all the repairs are being done at the head office location, I think we have now moved that out to a slightly remote location. So when you do those things tend to add additional costs, security, etc., etc.
Okay, thank you. Just another thing, I just want to know. There's a piece of land on Mullines Road, top side, Jessira Park there, down at the bottom there. Is Jetcon own that piece of land now? It's an empty house was there and it was demolished. Adjacent to the office, the head office there. Yeah. But it's more on Mullines Road there, and it's empty. Jetcon
About 2 blocks from where we are?
Yeah.
I think so, yeah.
Okay.
Something that puzzles me, page 24. Although Mr. Staple come with it.
I think something always puzzles you, man.
No, Mr. Staple come with it. No, Mr. Staple come with it.
I'm gonna encourage Jetcon to give you a scholarship to go study accounting. Right? So you can stop harassing the people unnecessarily.
Yeah. No, based upon Mr. Staple said
And
that.
I'd probably give Mr. Stapler a scholarship too.
Yeah, based upon what Mr. Staple said, may I look into this? Your growth, page 24, go back again to it. Your revenue as 1,025,900 and something. And your cost of sale, bracket 890,000.
That's the cost of sales, yeah.
Yeah, the bracket. You can give a little figure because I see you have 130.
The bracket is a subtract, it's just a matter of subtract. It's cost is subtracted from the revenue, so it's just showing in brackets to indicate it's a cost instead of revenue.
Because you see your growth profit are what?
Huh?
Your growth profit.
Gross profit.
Yeah, growth profit.
Gross.
Growth profit.
Gross.
Growth profit. All right.
Gross profit is the difference between the direct cost, which is the cost to import the vehicles, some selling costs.
Yeah, 135 million, 600 and something. Yeah.
What's the question?
Because 2018, you see in bracket again, 999 million something. I have 162 million something. You understand? Look at it.
What is the question?
The question between 2018 and 29, we see our bracket a breakdown. The breakdown I have 935,000 something. And the breakdown we talk at it.
I don't understand the question.
The sales, the cost of sale.
Yes.
Me see have the bracket as I just repeat all of it. Just it the 135 million. They want all you try to break down on it. Just get between 2018 and 19.
The $135 million is the gross profit. That is the difference between the sales and
other operating
No. Hold a second. We break the costs down between what we call direct cost, or in this case, cost of sales.
Yeah, right.
So the cost directly attributable to the sales, to a sale of a vehicle is treated as the cost of sales. So the purchase of the car, when they bring the car into Jamaica, we have to repair it, we have to pay duty on it. We have to
repair it?
We have to repair it. We do some repairs to that, our service. Right? So we have to make sure that it's up to standard to be delivered to a customer.
And even Mr. Chairman, if you have a service or something, you have to charge the customer more because you have to serve it because it become crippling. So you have to
well, you know the thing about the capitalist society, right? If you want to do that, then you have to go to Mr. Trump's country. So when you win the second term now, and you decide that whatever he says law throughout the land, So in that case, he will dictate who can import vehicles from who can make vehicles and what they can charge. But in the Jamaican situation where we have several motor car dealers, used car dealers, and people sourcing the vehicles from pretty much the same market, sometimes slightly different markets, you can't, where you have a lot of people selling, you can't just in one same market say, boy, my car prettier than the other one, so I'm going to charge 10% more. If the customer don't find that the prettiness is worth the 10%, he ain't going to buy it.
Hey, Mr. Chairman, let me come at Jetcon.
Yes.
I'm buy a BMW. When me test up everything, kick in. You know, things say, if me have it, when me say, boy, I come back and come buy one more because Jetcon thing exclusive. Like,
well, if you see some, if I ask you to turn to page 17, right? And you have some customer responses here, which is an indication of how customers relate, or some customers at any rate relate to the experience they've had with Jetcon. So sometimes people don't buy purely on the price basis, but on a total package. Because you can always go, there's one case that my brother should find a way of marketing that matter every day. One of his customers bought a car, and a few days afterwards, or shortly afterwards, I don't remember what went wrong with the car, but he complained, and my brother said, take the car back. He took the car back and either gave him the money or he bought another car. And he was most impressed with that because he didn't expect it. In other words, where we can deliver the unexpected that is pleasing, we have an asset that others may or may not have. And it's something not to be discounted.
Yeah, because some want good thing that feel comfortable, you know.
Yeah, but at the same time, if I can't afford to buy more than a mini minor, there's no point to price something at a BMW price to try and sell me. But any more questions online? All right. I'm going to put the motion to the meeting that I'd move and. Sorry?
Ms. Fagan is asking are there any plans in place to diversify income streams?
Well, I thought I heard my brother had mentioned that part of the concept for the additional property is to establish a new line. We didn't indicate time frame or anything of the sort. We have looked at diversification from time to time. One of the problems with diversification is that when you have a relatively dominant area, when you get into something new, it requires a fair bit of attention. And yes, there are other areas I'm sure we can get into. Some of them are capital intensive, but have higher risk. When we bring in a car, we get rid of it relatively fast. To get into spare parts and that type of thing, for example, as a means of diversification, after a while some of those things get obsolete and these sort of things. And theft is greater. It's more difficult for people to steal a motor vehicle than to steal a part than to steal a motor vehicle. And therefore management have to consider a number of things. You sell a car and you net X amount. You sell a part and you get $10. You sell a car, you get profit of 100 or 50 or whatever it is. And those things make differences. You know, D&G got rid of the irritated water business, and people may say, why they got rid of it? What they said, they noticed that when the same salespeople sell beers and they sell irritated water. But the profit or the price of a beer is like $10 and the irritated water might be $5 or $3. So there's less incentive to sell the irritated water because the guy is making less profit, commission off of it. So there are a series of things that sometimes have to be considered when you get into unsaturated water things. And then you divert management attention from an area that requires much more attention and probably deliver far less profit. But the fact of the matter, life is dynamic, businesses are dynamic, and sometimes things that are maybe closed at one stage may open up later on. So let us get on to the formal matter of the meeting. The financial statements have been presented, have been tabled, and I will move a resolution that we receive and accept the audited financial statements for the year ended December 2019, together with reports of the directors and auditors thereon. Mr. Staple seconded. Thank you, Mr. Staple. Can we vote? Those in favor of the resolution? Aye. Those against? The motion is carried. Next item on the agenda, be it resolved that the following directors, Sean Jackson, Joel Jackson, and Andrew B. Jackson, in accordance with Article 99 of the company's Articles of Association, and being eligible, offer themselves for re-election. I'm going to propose that. Yes, Mr. Stable.
I think we have 3 directors to be re-elected.
Yes.
I am moving a resolution that we take this en bloc.
Thank you, sir. Yeah. Seconder? Yeah, seconded. Who is? Joel, you have a name? Seconder? You have the... Okay. So you have the resolution. Can we vote on the resolution? Do we... All in favor of the resolution for them to be taken en bloc? All right. So that's the resolution to be taken en bloc. Now we have to vote for them. For them. So all in favor of the 3 directors being re-elected? Okay. Ayes have it. Approve the remuneration of directors. To consider and if thought fit pass the following resolution. That the amount shown in the audited financial statement for the year ended December 2019, director's fees, I guess that's as director's fees, is hereby approved. Seconded. All in favor? Those in favor? Any against? The ayes have it. To appoint Crooks, Jackson, Burnett, Chartered Accountant as auditors of the company for the ensuing year and to authorize the directors to fix their remuneration. Second. Your name, Mr. Hendricks, yeah. Those in favor? Those against? All in favor except Mr. Staples voted against it. All right. So, Steve, you mustn't always expose yourself. You know, you might find that people come and chase you and attack you.
Professionalism.
Yeah, but sometimes if you don't have
I could care less. I believe in professionalism. I have to take it my way.
That's okay. All right. Are there any other business? All right. If there are no other business.
Mr. Chair, I would like to say thanks to the members.
Have I recognized you? Have I recognized you, sir?
Allowed us in this setting
Yes.
to be as protective as we are, ensuring that we all have our masks and we are sanitized. Thank you very much, team, and we look forward to a good year.
All right. And there are no more questions on the online? Sorry, Ms. Livingston. No more question. All right. Yes,
What about dividend? What about dividend?
sorry?
Dividend. No, you read the part.
No, well, that wasn't on the agenda. Well, next year we put it on the agenda.
All right.
Or we pay it before the next year. All right?
Well, Mr. Chairman, I would love to see.
The fact of the matter is that the directors considered the whole matter of dividend under the circumstances of state of affairs in the country. We felt that it would not have been prudent to declare a dividend.
Mr. Chair.
At this time, at any rate. Yes, Mr.
Chair. The Bank of Jamaica, along with representatives of corporate Jamaica, indicated that all those shareholders between 0 and 1% of the total number of shares, if a dividend is declared, they should be given first priority.
I don't think you have it quite right, but it's okay. I won't get into that discussion.
Mr. Chairman, we need an increase of dividend and a quarter dividend here.
Well,
So,
I hear you, but the point is, you see what, can I don't want to prolong the thing, but one of the issues about paying dividends, you know, when you pay small dividends and you pay them frequently, there's a cost attached to that. Every check, there's a cost. Just to post them out, if you have to post them, there's a cost.
Well, I said direct to the
No, but you have to pay the stock. You have to pay the stock exchange for processing those things as well. So it drives a cost. So when you're dealing with a small company, those things, a Grace Kennedy is possible peanuts, right? But a Jetcon, Jamaica Tea, or many of those smaller companies, we're talking about millions of dollars being eaten up into additional cost. So sometimes that you, as we did with Jamaica Teas, we decided to make one dividend payment and forego 2 payments of the year.
my concern, Mr. Chair, is that you should have taken this into consideration when you were putting the IPO on the market.
Taking what into consideration?
Small shareholders
Yeah.
have small number of units. Their shares would be their dividend payment would not be as big as those who have hundreds and thousands and millions. So,
Yeah, but
like this,
the fact of the matter is,
shareholders are looking for
Mr. Stable, many small shareholders end up getting dividend, and it costs them more to drive to the bank to lodge the money.
cost it to lodge anything to the bank.
No, but it costs money. I mean, I get some checks from Trinidad, $2 and $1, whatever it is. It's Trinidadian dollar, so.
Mr. Chairman, I pass upon New Kingston. Let's some new carpets and we one day.
Sorry?
I pass upon New Kingston. But when you come Axel Road, I saw some half Axel Road. See on the place below. And with the next carpets. But you have World Cup competition, first time smoking about what you have a World Cup competition.
All right, well.
So you have to show your competition back on them.
May I just thank all persons, those persons who organized today's event, the auditors, the staff who put in the effort, the management, and thank you all. I didn't expect to see anybody but the directors here and maybe 1 or 2 others. So I was quite shocked. So thanks for coming, and thanks for the energetic participation of you all. And thanks to the directors.